Hello, welcome back guys. In this video we are talking about one of my favorite companies right now, especially its current price as it has been falling, Google, which is about to split its stock. There's going to be a split of 20 to 1 happening, and it's going to start today pretty much at the market open. The stock split date was basically July 15th after the close of the market, and so you're gonna see at the changes, at the upcoming changes today, actually Monday that is, because today is Saturday. And so Monday the 18th is going to see about a 20 to 1 stock split for Google. That's GOOG and Google, both classes of shares for Google here, for Alphabet. Now, in this video, I wanted to take a little bit of a look and kind of explain to you how a stock split works, what to expect from this one. I have found a very nice article here from Morningstar, which kind of explains what has happened in the history of Google in terms of its stock splits, because Google has split before, and it's good to know what is happening with its split. It's important to realize. Now, practically speaking, when a stock is split, nothing changes in terms of the market cap. Now, the market cap of the company, if we go back to our stock tool here, what is it? What is the market cap? So the market cap is the price of the stock multiplied by the amount of outstanding shares that you can see here for the company. And this amount of outstanding shares includes both classes of stock. It has to include both, really, because both are tradable, and they basically have investors that take part of the earnings, at least theoretically, as part of their investment here. And so these have to be added together to give us the market cap of the company. Again, it's the price of the stock, the current price, multiplied to the outstanding share by the outstanding shares here. Now, as you can understand, we're getting a 20 to 1 pretty much stock split. What does that mean? For every one share that you have, for every one stock, you will be getting 20 instead of 1. So Monday, if you had one share, now you're going to be having 20 shares. But what is going to happen here is your price is going to be divided by 20 as well. And so instead of $2,200, this is going to be divided by 20, and you're going to be getting something like 110 in terms of its stock price. Why? Because if we open up a calculator, I can show you now. If we open up a calculator here, you will see that 22.53, which is the price of the stock today, divided by 20, is going to give us 112.65. Is about the price we're going to get when the market opens on Monday. And we're going to be having 20 stocks in our portfolio if we had one, for every one shares that we had, every one share that we had. So, what I wanted to show you here is that Google has actually split in the past. And that split was 1,998 for 1,000. Now that sounds weird. You may be thinking to yourself, how is that even going to work? What would have happened if I had, let's just say, 10 shares or 12 shares? How would that have worked? That would have been an even number, right? And yeah, it would more than likely have been an uneven number. And the way this works is you either get a fractional share, so you either get like 0.4, 0.467, something of that sort in terms of a share. Depends on whether your brokerage actually allows for that. A brokerage like Robinhood would allow for that, but some brokerages wouldn't. And in that case, you would just get cash back for that amount of fractional shares. So you would see that in your market fund account in your brokerage. So this is how it would work, and this is how it's going to work upcoming Monday. Now, a 20 to 1 is much more clean, as you can understand. So you had 5 shares, now you're getting 100, for example. Multiply that by 20. And you can kind of see what has been happening in the history of Google here. Another stock split back in 2014. This is the second one, basically, that the company has in 2022. Basically, the company has been a high flyer, and even though it's been dropping a little bit lately, overall it's a fantastic company for which we have talked about. And because of this happening, because of the company's stock split, I wanted to spend some time and take a little bit of a look again at the company's financials, and we have talked about them in the past again. We're going to do that a little bit more quickly here. Now, the P ratio of the company, the price to free cash flow, is 21 and 22 based on the current stock price. If you take a look at the 6-month chart, you will see that it has been going down, giving us a fantastic entry point. Take a look at this one, like the 1 year. We are almost back where we were back in April, or March, I should say, 2021, very close to that. And 21 and 22 price to free cash flow and PE ratio here is very fair, very nice to see for a company of that sort, because you may be wanting to buy companies that have a PE ratio of 20 and less, and that's fair. But it really depends on other factors as well, on whether you should be paying a little bit more of a higher of a multiple than 20 or less than 20. Not every company has to have a multiple of 20, because companies are different in what they are doing, they are different in operations, and they are different in what they are producing and how they are growing as well. Now, for instance, if you're having a company that is very solvent, for example, total liabilities to free cash flow is 1.6, it has fantastic net income margins here, or 28% almost here, great return on equity, for example, which is 30% again over here, without much debt even. A very low debt to equity ratio, and look at this growth, the 5-year revenue growth, 5-year net income growth for a company that is already doing billions, and it's still growing at 132% in the past 5 years. These are all fantastic signs. They are also buying back shares. They will be buying back even more shares, and so all these factors combined, they could actually give you a pass, a green, basically, for buying Google, even though their PE ratio and price to free cash flow may be slightly elevated, and even though their DCF model could also be slightly elevated for some of our scenarios. It may still be a very interesting purchase, this one. And so this is why I wanted to take a little bit of a closer look at GOOG here. And because of this opportunity, I kind of wanted to give you a little bit of a, I guess, first look on what is going to be a new module in our tool here. And this is going to be about sales, basically, and it's going to be about senator sales and senator trades, basically. And I wanted to kind of give you a peek of what this is going to be. This is not released yet in our tool, but it's going to be in the next week or so. But I still wanted to give you pretty much a heads up and a preview of the functionality. So let me show you this one for Google. So this is the module here. You can kind of see what has been happening. This is still pretty much a work in progress. I'm still working on this one, but you can already see that in the last 3 months there have been more sales than purchases, although they are in low numbers. Like there has been one here and 4 purchases and 2 sales. So it's a little bit of a balanced picture. This is Google, but if you take a look at GOOG, actually GOOG here, which is, remember, we have 2 classes of search here. Let's take a look at this one as well. Now this one, you will see that it has more purchases here in the last 6 months. Not much activity for the last 3 months. This is why you're not seeing it here. It's some time ago, really. But overall, you can see a picture of quite some people actually selling here in the past few months. But not much happening lately. You will see that most of these sales have been back in 2021, for instance. January 2022 has been one, for example, here. So this is what you are seeing pretty much on this tool here. You are seeing what has happened in the past 6 months, the past 3 months in terms of sales of the stock. You may be wondering why this one is not included here. That happened 6 months, more than 6 months ago. This was January 14. Right now it's July 16th. This is why this is not included here. So you're basically seeing the last 6 months of trades here. And in terms of the trades here for all of these senators, these are more, for the most part, trades that have happened before 6 months, before the 6-month period that you are seeing here, pretty much the last 6 months. So yeah, again, this is a work in progress, but I thought it's useful to at least take a peek at what is happening with Google right now. And of course, you can always take a look at all these modules that we have here for our tool. You may want to become a patron. You can find a link in the description box below this video. You can join the tool and get all this here that I'm using for my videos. And I think they're very helpful for analysis. Okay. And there is a very interesting module here that is also very beneficial to take a look at. And I like to see the insider trades. So there are 2 types of trades, senator and insider ones. Now the senator trades have to do with our senators, of course, the US senators, but insiders are also important, and especially when they're buying stuff. Now, a director, for example, can sell a lot of things because they are part of their compensation. So you can type sell here and see all the sales that have been happening for the company. But again, this is not too much of a concern unless maybe they are completely liquidating everything, all of their positions the vast majority of their positions. Now over here you will see that they are owning much more securities than the ones that are liquidating here. They're much less, and so the transaction values here are very low. So nothing seems to be happening here that is too important to be examining, that doesn't really bring up any warnings. But I wanted to take a look at the buys here, and you will see that the buys, you can kind of potentially see some buys, some insiders paying with their money here and buying stock. This doesn't seem to be the case. Now we do have buys, but remember, these are transaction types of award, for instance. So these are grants, awards, or other acquisition of securities, and so the transaction values are zero. And even though they are getting stock, they are not getting it by directly paying with their money. So not much really happening in terms of insiders here that would give us some pointers. But regardless, nonetheless, it's important to and interesting to be taking a peek at. Another useful module I feel, which is also still a work in progress. I'm gonna be adding some graphs and stuff here to make it more visual even. Okay, let's for our final act here, take a look at our stock evaluation tool and try to come up with a valuation and what we want to be paying for Google here. Now, there is no doubt that Google is a growth machine. You will see that their average, the 5-year average revenue growth has been 24% almost. And you can see the breakdown here, like annually. The company has been increasing the revenues at a fantastic rate over here. And what we could be doing is try to go a little bit sort of like wide, like try a few different revenue growth numbers here and see what we're getting, because again the company could continue achieving this kind of high growth situations here, but we're going to try some lower ones as well. So we're going to try a 12% one, a 15% and an 18% one, and see how we're going with these. Now the net income margins, again, I'm going to go in between. I'm going to go with 21, 24 and 27, and last year they actually did more than 27, which is important to also take a look at. Maybe we want to be trying 29 or 30 potentially. They seem to be increasing their margins here. You can see the breakdown here as well. But overall, it looks like they have been doing 22, 21. This seems to be kind of the average. Now, the free cash flow margin that we're going to be using is mostly for the most part like 90, 100, and 110 here. This would mean, like for instance, this 100 here basically means 24%. It's exactly the same as the net income margin. Is pretty much a percentage of the net income margin. Now the annual return is 13%, is what we want to be seeing here. And if we hit calculate, you will notice that we're getting a value that is green for our medium and our high estimates here. And remember that we went relatively low and conservative for our low and medium ones. Even our high ones are potentially conservative because of our net income margin, which is lower here. If the company continues achieving that, then we're aiming for higher prices as well. Now our low estimate is lower, is $1,600. We are not there, but again we are there for our medium one. And remember, this may be looking like a company that is marginal in terms of a purchase right now, but there are tons of things that are working the company's way, really, and this is what we talked about earlier in the video. A company that has amazing margins that get increased here. They have amazing growth that also gets increased and has been increasing through the years. And remember, this is a company that is making billions. So a 10% here is actually $50 billion. So this is an insane amount. So the absolute number matters a lot as well. So the free cash flow has been increasing tremendously as well. Basically, the company has been doing great in all fronts. No debt, yet amazing return on equity. The company is doing amazingly well. And so this is what I wanted to talk about in this video, kind of give you a breakdown of what I'm seeing right now with Google, talk about the stock split as well, and kind of discuss whether this is a potentially interesting opportunity for a purchase. I own this company myself, and I may be looking to add a little bit more in the future. Now, what is going to happen after the split? Typically, you kind of see potentially 1 or 2 days of green action. Maybe that doesn't happen, but typically it tends to be a little bit positive for 1 or 2 days, but then maybe it kind of balances itself out. Not much tends to be happening when there's a stock split. Maybe there's a little bit of a positive sentiment for a couple of days, then kind of balances itself out, typically at least. This is what happened with Amazon, for example, in its latest stock split. So thank you for watching this video. Please remember to leave a like, that helps a lot. And if you did enjoy this one, take a look at this video that I made earlier about Alibaba and what is happening right now with the company being down about 25% for no real reason. Take a look at this video and you will understand some of the finer details. And thanks for watching this one again. Remember to subscribe if you haven't been a subscriber already, and I'll see you in the next one, guys. Bye bye.